Okay, let's unpack this headline that's been making waves. AMD's Q1 2025 results beat expectations, but a major geopolitical event is casting a shadow on the future.
Yeah, that really sums it up, doesn't it? You've got this juxtaposition of really strong performance right next to a pretty significant external challenge.
Exactly. It's that kind of dynamic we really want to get into today. AMD putting up great numbers for the first quarter of 2025.
But also having to navigate these new U.S. export rules, which is, well, definitely a curveball.
Right. So for this deep dive, we've gathered, the key stuff. AMD's official earnings release, naturally, plus analyst reports digging into the details, and those earnings call transcripts, where you often get the extra color.
All the essential pieces.
Our mission today is pretty straightforward. We want to boil down all this information for you, the listener, help you get a handle on AMD's recent successes, understand the impact of these AI chip export restrictions to China.
And sort of figure out what it all means for the bigger tech picture, especially, with AI being such a huge focus everywhere right now.
Think of it as us doing the heavy lifting, so you get the crucial insights without wading through everything yourself.
Exactly. We'll break down the performance, the outlook, give you the context you need.
Okay, so here's how we'll structure it, just to give you a roadmap. We'll start with Chapter 1, an executive snapshot, the big picture stuff. Then Chapter 2, results versus expectations, how they actually stacked up against the forecasts.
Right.
Chapter 3 is drivers and management highlights, what powered the results and what did leadership emphasize.
Always interesting to hear their take.
Chapter 4 will look at the outlook and key metrics, what they're predicting for the future.
Crucial chapter, that one.
And finally, Chapter 5, our bottom line takeaways, pulling it all together.
Sounds like a good plan.
Now, if you find this kind of deep financial breakdown useful, definitely consider subscribing to the Stock Analytics AI YouTube channel. We do this regularly.
Yeah, more content like this over there.
And just a quick heads up before we dive in, we will be discussing financial info and obviously artificial intelligence. So standard disclaimer applies. Any investment decisions need careful thought and, ideally, advice from a professional.
Absolutely. We're here to analyze and inform, not give financial advice.
Okay, great. Let's get started then. Chapter 1, Executive Snapshot. What's the immediate takeaway from AMD's Q1?
Well, the top line is definitely strong performance. Q1 2025, they beat expectations on both revenue and earnings per share. So a good start to the year on the surface.
So what was behind that beat?
Primarily, it looks like exceptional growth in their data center and client segments. Those two really carried the load.
And the AI story is a big part of that data center strength, I assume.
Oh, absolutely. They're seeing really strong traction for their Instinct GPUs and also their EPYC CPUs. It's clear they're becoming a major player in, the infrastructure needed for AI.
But then there's that shadow we went to in the geopolitical side.
Right, exactly. The new U.S. export controls. They specifically restrict advanced AI accelerator sales to China, and AMD themselves said this will have a, quote, material impact.
So not just a small thing. And it has immediate financial consequences, too.
Yes, that's right. They're actually anticipating a pretty substantial inventory charge in the second quarter, Q2, directly because of these controls. That's going to hit their margins.
Okay, so strong Q1, AI momentum, but this big export control issue hitting soon. Despite that, what's their overall outlook for the year?
Well, this is where it gets interesting. Despite acknowledging those headwinds, management is still projecting strong double-digit revenue growth for the full year 2025.
Really? Even with the China impact?
Yeah, it signals a lot of confidence in their other segments or regions being able to pick up the slack.
Let's put some numbers on Q1 performance. What were the key non-GAAP figures?
Okay, so for Q1, non-GAAP revenue was $7.438 billion. That's up a solid 36% year over year.
Wow, 36%.
And non-GAAP diluted EPS, earnings per share, came in at 0.96 cents. That's an even bigger jump, 55% year over year. Remember, non-GAAP usually gives a clearer view of core operations.
Okay, so strong growth compared to last year. What are they guiding for Q2? The current quarter?
For Q2, they're expecting revenue to be basically flat compared to Q1, sequentially flat. But, and this is important, that guidance includes that big inventory write-down we just talked about.
Ah, okay. So underlying might be a bit different, but they're still sticking to that full-year confidence.
They are. Management seems quite convinced they can offset the hit from the export controls through growth elsewhere, other regions, new products ramping up.
So if you had to characterize Q1 in a nutshell?
I'd say it was about accelerating AI adoption, really strong demand in data center and client, a gaming segment that's kind of normalizing.
Right, coming back down to earth a bit, maybe.
Yeah, and then obviously the significant tangible impact of those trade restrictions starting to show up in the forecasts.
And that impact on Q2 gross margin sounds pretty stark.
It really is. They're projecting 43% for Q2 non-GAAP gross margin. But again, that includes an estimated $800 million inventory charge.
Ouch.
If you pull that charge out, the underlying margin looks more like 54%, which is actually pretty healthy, flat sequentially and up year over year.
Which circles back to that bold statement.
Yeah.
Strong double-digit percentage revenue growth in 2025, even while expecting a $1.5 billion annual hit from these controls. That's quite a claim.
It definitely is. And for anyone watching AMD, the big takeaway here is assessing their ability to juggle these things, maintain core strength while navigating these, frankly, quite significant external risks and global complexities.
Okay, that sets the stage really well. Let's move to Chapter 2, results versus expectations.
Yeah.
We know they beat, but let's get specific. When did the report drop?
The Q1 2025 earnings came out on May 6th, 2025.
And the headline numbers again.
Reported net revenue was $7.438 billion. GAAP diluted EPS was $0.44, but the one the market watches closely, non-GAAP diluted EPS, was $0.96.
So how did that $7.438 billion revenue compare to what analysts were expecting?
It was a solid beat. Consensus estimates were hovering somewhere between $7.1 billion and $7.13 billion. So using Zach's number of $7.13 billion, that's roughly a 4.45% beat on revenue.
Pretty decent. And the non-GAAP EPS of 96 cents.
Also a beat. The consensus range was generally 93 to 95. So, depending on which exact consensus you use, it's maybe a 2% to 3.2% beat. Good, but maybe not quite as strong a beat as revenue.
Still, beats on both top and bottom lines. What about looking back a year, the year-over-year growth?
Yeah, those numbers are where things look really impressive. Revenue, as we said, up 36% year over year, 7.438 Bs versus 5.473 Bs in Q1 24.
Huge jump.
Non-GAAP EPS up 55%, or times 96 visas and 62 cents. And the GAAP EPS saw this, massive percentage increase, up 529%, $702.44 visas, partly because the base was lower.
Okay, really strong year-over-year story. How did Q1 compare sequentially, so versus Q4 of last year?
Sequentially, there were some dips. Revenue was down about 3% from Q4 2024's $7.658 billion.
Right.
And non-GAAP EPS dropped 12% from $1.09 in Q4. Interestingly, though, GAAP EPS actually increased 52% from Q4.
Why the sequential dips in revenue and non-GAAP EPS? Anything to worry about there?
Probably not overly concerning. You have to remember, Q4 is often seasonally very strong for chip companies, holiday sales, end-of-year budgets getting spent.
Or seasonality.
Yeah, so modest dips from Q4 are pretty normal. Could also be some inventory stuff or timing around new product launches.
So the key indicator is really that strong year-over-year growth.
Absolutely. That's what points to the underlying business momentum and, the market share gains they seem to be making.
And management had a specific point they wanted to emphasize about that growth trend, didn't they?
They did. They highlighted that this was actually the fourth quarter in a row where their year-over-year revenue growth accelerated.
Ah, okay. So not just growing, but growing faster.
Exactly.
Yeah.
Which they see as reinforcing their competitive position, especially in those key data center and client markets. It suggests they're really executing well right now.
Okay, let's pivot to Chapter 3, drivers and management highlights. What was the overall vibe from leadership on the earnings call?
The main message was definitely one of strong execution and clear strategic focus. They painted a picture of a company firing on, most cylinders in its core areas, while also really leaning into the AI opportunity.
What did Dr. Lisa Su, the CEO, specifically say?
She called it an outstanding start to 2025. She mentioned that fourth consecutive quarter of accelerating year-over-year growth again, pointing to the core business strength, plus that expanding data center and AI momentum.
Did she acknowledge the difficulties?
Yes, she acknowledged the challenging operating environment, but expressed, a lot of confidence in their product portfolio and their execution. She specifically credited the Q1 beat to growth in Instinct AI accelerators, EPYC server CPUs, and Ryzen client CPUs.
And she doubled down on that full-year forecast.
She did. Reaffirmed that confidence in achieving strong double-digit percentage revenue growth in 2025.
And the CFO, Jean Hu, what was her take?
She echoed the positivity, highlighted the 36% year-over-year revenue growth, and pointed to what she called significant earnings leverage as our business gains scale. Basically, profitability is improving as they grow bigger.
Makes sense.
She also confirmed they're continuing to invest in R&D and go-to-market efforts for the long haul. And she noted Q1 revenue came in above their own guidance thanks to data center and the combined client and gaming strength.
So the overall tone sounds like optimism about their products and the market opportunities, particularly AI and data center.
Definitely. But balanced, with a realistic acknowledgement of the regulatory headwinds and the broader macro environment, they weren't ignoring the challenges.
Let's dig into those primary drivers for Q1 again. Core business strength, data center, AI. What else?
Well, alongside the core business strength and that expanding data center momentum driven by both EPYC and Instinct there, was the burgeoning AI momentum itself, with Instinct sales really taking off. And then robust client performance was also key, helped by those new Zen 5 Ryzen chips, and interestingly, a richer mix, meaning higher average selling prices.
You mentioned the analyst Q&A. What were they pressing management on?
Yeah, some key topics were the client business performance, digging into that recovery, the launch timing for the next-gen MI350 series AI accelerators, and inevitably, lots of questions about the implications of those China export controls.
What more did they say about the client business? That ASP increase is interesting.
They talked about strong customer interest in their new AI PC processors. That demand seems to be driving sales towards the higher-end desktop and mobile Ryzen parts, leading to those record client CPU ASPs.
And on the AI accelerator front, MI350, MI400.
They signaled strong customer engagement for the MI350, which is current or just launching, and also the upcoming MI400 series. They also made a point of saying they're committed to serving both AI inference and training markets.
Okay, and back to the China export controls.
Mm-hmm.
What was the concrete impact number they shared?
They confirmed the potential hit is around $1.5 billion in revenue for the full year 2025. That's the estimated impact from not being able to ship the MI308 accelerator to China.
$1.5 billion is a big number. How did they frame their ability to handle that?
They expressed optimism, basically saying they expect to offset that loss through growth in other regions and with other products. They seem to be focusing hard on what they can control.
Which is?
Product leadership, execution, and tapping into those big AI and data center opportunities outside of China.
So they're framing the China impact as a headwind, but one they can overcome.
Pretty much. They described it as a headwind to be more than offset by the powerful tailwinds from their product portfolio.
And which products are they really banking on for that future growth?
They specifically called out the MI350 and MI400 AI accelerators, and also their next-gen EPYC server processor, codenamed Venice. Those seem to be the big growth engines they're relying on going forward.
Okay, this leads us nicely into Chapter 4, Outlook and Key Metrics. What's the official guidance for Q2?
For the second quarter, ending around June, they're guiding revenue to approximately $7.4 billion, plus or minus $300 million. So, like we said, essentially flat compared to Q1.
And the Q2 gross margin guidance, the one with the big charge.
Right. Non-GAAP gross margin guidance is 43%, and they explicitly stated this includes that roughly $800 million charge for inventory reserves tied to the export controls.
So the real underlying margin, excluding that charge,
is projected to be around 54%, which, is basically flat with Q1 and up year over year, shows the core profitability is holding up okay.
How did that Q2 revenue guide of $7.4 billion compare to what analysts thought before the earnings?
It actually looks slightly better. Pre-release consensus was generally in the $7.24 billion to $7.35 billion range, so their midpoint guidance topped that a bit.
Interesting. And analysts will be looking hard at both margin numbers, the 43% reported and the 54% X charge.
Absolutely. The 43% is the official number, but the 54% gives that clear view of operational health, stripping out the one-off hit.
And for the full year 2025, they stuck with the same general forecast.
Yep. Reiterated that expectation of strong double-digit percentage revenue growth.
Do we know what analysts were forecasting for the full year before this update?
Yeah, pre-report consensus was around $31.31 billion in revenue and about $4.40 for non-GAAP EPS.
So if they hit strong double-digit growth, even after losing $1.5 billion from China, they might still land near or even above that consensus.
That seems to be the implication, yes. It's ambitious. Strong double-digit could mean anything from, say, 10% up to maybe 15-20%. Even 10% growth would require finding over $4 billion in new or expanded revenue, including making up that $1.5 billion loss. 15% growth would need closer to $5.4 billion.
So what are the key assumptions baked into that confident outlook?
Well, number one is obviously booking that $800 million charge in Q2 related to the MI308 inventory for China.
Right.
Number two is that the total annual hit from those controls is indeed around $1.5 billion.
Okay.
And number three, the big one, is that they can achieve really aggressive growth in other areas to make up for it, specifically data center AI outside of China and continued recovery in the client segment.
Did the CFO give any more color on which segments would do what in Q2 specifically?
She did. Jane Hu said for Q2, they expect client and gaming to increase revenue by double-digit percentages sequentially.
Okay, so strength there.
Embedded segment revenue is expected to be flat-ish, but the data center segment revenue is expected to decrease sequentially in Q2.
Why the decrease there?
She directly tied it to the exclusion of that MI308 revenue that can no longer go to China. So that's where the immediate impact is hitting hardest segment-wise.
That makes the full-year forecast seem even more dependent on a strong second half for data center then.
Exactly. To hit that overall strong double-digit growth for the year, data center, ex-China, really needs to rebound and accelerate significantly in H2 2025.
What needs to happen for that rebound?
It hinges on the successful ramp-up of those other AI accelerators, the MI300X, MI325X, the upcoming MI350, MI400, getting adopted quickly by customers outside China, plus continued EPYC adoption and that client recovery holding strong.
A lot of moving parts have to go right for them.
Definitely. The credibility of that full-year forecast rests heavily on execution in the back half of the year.
Okay, let's wrap things up with Chapter 5. Bottom line takeaways. What are the absolute key points for listeners?
All right, takeaway number one, AMD had a strong Q1 2025. They beat expectations on revenue and earnings, largely thanks to great performance in data center and client.
Takeaway 2. They're riding the AI wave effectively.
Yes, definitely capitalizing on the AI boom with both Instinct GPUs and EPYC CPUs. Lots of momentum there.
Takeaway 3. The big but.
The big but is the new U.S. export controls impacting China sales. This is a real headwind, about $1.5 billion for the year, and it's causing that significant inventory charge in Q2, which will hurt reported margins.
Okay, and takeaway 4.
Despite that challenge, management is sticking to its guns, projecting strong double-digit revenue growth for the full year. They're banking on growth in other areas, especially new AI chips outside China and the client recovery, to offset the China loss.
So takeaway 5 is what investors need to watch.
Exactly. Keep a close eye on data center performance, excluding China, how well AI PCs take off, the competitive dynamics, and that underlying profitability once you adjust for the Q2 charge. Can they navigate all this and hit those ambitious targets? That's the key question.
And it's worth remembering AMD's AI play isn't just GPUs, right?
Absolutely. It includes their EPYC CPUs, which are critical for AI workloads too, the emerging AI PC market for their Ryzen chips, and even specialized embedded AI stuff. That diversification could be a real long-term strength.
So, summing up the deep dive. Strong Q1, significant China export control hurdle, but management remains optimistic, relying on other growth drivers.
That captures it pretty well. It sets up a really interesting rest of the year for them.
Definitely. And maybe a final provocative thought for you, the listener, to chew on. How is this constant back and forth between amazing tech innovation in AI hardware and these shifting geopolitical sands going to keep shaping the semiconductor industry? What other, unforeseen twists might be coming down the pike for critical players like AMD and their competitors?
It's a fascinating space to watch, full of complexity. Staying informed is key.
Absolutely. And if you want more deep dives like this one, breaking down company performance and market trends, remember to subscribe to the Stock Analytics AI YouTube channel.
And one last time, just a reminder, this discussion involved financial data and AI topics. Please do your own homework and consult a professional advisor before making any investment choices.